Hello, this is Founders Pod. I'm Lilith, the founder of Founders Investment Syndicate that are focusing on the Canadian early stage technology companies. So, through my journey in venture capital space, I've met a lot of incredible people. They're the ones reshaping our world with the disruptive technologies, and I'm just so excited to bring their stories right to you. So, in this podcast, we'll chat with the innovators, founders, and masters and experts, each with the unique stories and insights that are just too good to keep to ourselves. So, this is all about sharing real human stories behind the latest technology innovations and understanding the rapid changes in our tech world. So, grab a coffee, relax, and join us as we're diving into these conversations. Oh, and hey, if you want to know more about what we're building, swing by founders.com. So, now let's get started. Up next is my conversation with Yuri Navarro, the managing partner at Kanata Ventures and the former CEO of National Angel Capital Organization, in other words, NACO, which is the only national industry association for angel investors in Canada, with over 4,200 angel investors, 45 incubators and accelerators, and 44 angel groups. Before leading NACO, Yuri served in various capacities in government too, including Ontario Ministries of Economic Development and Trade.
I knew from the moment that I went into government that I wasn't going to be in government forever. And even joining NACO for me was largely driven by that because, the startup that I was working in failed. Became pretty quickly apparent that there wasn't a lot of risk capital out there for this by mistake or not on purpose, but the investors would end up kind of killing the startups that they were trying to fund.
Yuri and I are actually met at a Halloween party. You look like, I'm not gonna tell everyone what your costume was, but that was definitely hilarious. So yeah, we'll just keep it a secret. A quick heads up to everyone that Yuri is the managing partner at Kanata Venture. And I see that Yuri, you were the CEO of NACO. I just heard of someone you spoke at the different events, Hardware Summit.
Yeah, for sure. It's always I find that it's always fun to participate in those things if it's a relevant topic and a relevant audience, and it helps that when I get to be on a panel with friends. So I think both at the Hardware Summit and the TIE conference that was happening in Ottawa, it was nice to reconnect with friends and talk about some very kind of important current topics. So kind of AI on the one hand, kind of investment in AI on the one hand, and the other one was more investment specifically around what we call hard tech, which is kind of deep tech hardware. Yeah.
Yeah, sure. I love to hear more about on the AI part because like Fundlers is now raising ASPE for AI company. So that's definitely one of the major things I want to hear about. And it's good to hear that you have fun. So we want to know the journey of your story. You definitely had an amazing journey, I have to say. So before we talk about what you're building now, Kanata Venture, I want to hear some context. So I know that you previously worked a really long time within the government department. So I was wondering, like, what has led you to the venture capital space?
Well, so I actually started off in investments. That's where I started my career, if you will. Yeah, I've had I'm a person, I've been working since I was like 14. So I've had I would say like various different almost like little mini careers, but when I started my real career, it was in investments, mainly on the kind of wealth management, financial planning and investment advisory capacity, working for one of the big banks. Really wanted to be in a job where I could use the things that I enjoyed doing, which was investing. I was one of those people that would regularly kind of just play the markets on the side to make some money and fun. And so I wanted to take something that I enjoyed doing that I felt I was pretty good at, and align that with a job essentially where I could do it for other people and make money in the process. Um, the reality of working within a big bank is often very different than sometimes we imagine it. And so I quickly realized that I didn't really want to be doing that job, especially not within one of the big financial institutions. And Just wasn't kind of what I thought I was signing up for. And so That's kind of how I ended up in politics. It wasn't on purpose. It wasn't something that I intended to do, but essentially an opportunity fell on my lap at an event that I was at. I got to speaking with somebody very senior in the government at the time, government of Ontario, deputy premier actually came up to me at an event and asked me if I would be interested in coming to work for him. That was based on some volunteer work that I had done. So, you know, people kind of knew who I was from a volunteer perspective. And that's how I ended up in government in some way. Now, there's a longer version of that story, but suffice it to say that after thinking about it thoroughly and considering my options, I decided to walk away from, a career in finance, my many designations, all the schooling that I had done, and go into government. I knew from the moment that I went into government that I wasn't going to be in government forever. I never saw myself as a bureaucrat or as um, a political person primarily. I always see myself as more of a business person primarily. But I figured, it'd be interesting to learn something. It'd be interesting to get an understanding of how the government works. I think that is something that would be useful, frankly, for all citizens. I think to learn about, especially given how big of an impact the government has on our daily lives and how little we understand usually about it. But that was my main motivation for getting into government. Now, the way I ended up where I am today has to do with that because when I went into government, I had the opportunity to work very briefly in the Ministry of Health, mostly in the Ministry of Energy. And when I was in the Ministry of Energy, I got to work on policy files related to the Green Energy Act at the time, which was a landmark legislation that was being formulated. Um, when doing that, I got to work specifically within smart grid, energy conservation, demand management. So these issues related to how do you kind of work on the grid with innovations around how to deploy and distribute energy, how to create energy. And so got really interested in, the overlay of technology with the energy infrastructure and also the issues related to climate change, kind of the issues related to global warming, and how those things kind of tie together and the importance of technology to solve for that. So suffice it to say, I spent about 2 years working there, getting to really know and understand the landscape, helping to shape some of the policies that ended up becoming kind of, I think, landmark legislation at the time. But also, I think many of them are still in play, especially on the demand management, conservation side of things. And so, yeah, I just got really passionate about the issue of how do we use technology, how do we use entrepreneurs to help solve for some of these issues. And So much so that I left the government to go do a startup, working in that space, and then eventually running and setting up an incubator in the cleantech space. So it was that was kind of like how I ended up getting into entrepreneurship, and a lot of my life is kind of this rabbit hole of like, pursuing something that I'm interested in, that I'm passionate about, that I think I can have an impact on, and then kind of seeing where it'll take me. So that's kind of my stint in government. And yeah, like in many ways, it opened the door for me to get into entrepreneurship and finance through kind of the startup that I worked with and the incubator that I worked with.
Yeah, sounds amazing. So I have a question for you. So were you trying to start your own business or build your own organization like alongside, is it always your one of your dream or goal, or is it something that you grow
Yeah,
alongside?
yeah. I think I've always had, I guess, entrepreneurial leanings, if you will. Like, ever since I was a kid, there's those kids that like are always coming up with ways to make a buck. That was definitely me. And I always knew I wanted to have a business, but um, I'm also, I guess, very calculated and maybe a bit conservative sometimes. So I wanted to take the approach of de-risking the learning I needed to go through in order to be an entrepreneur. So, learning about finance, learning about how government works, learning about the clean tech sector, running what was essentially a spin-off of another company, as a startup, but leading that team and executing on that vision. Were always for me to learn kind of the pieces that I needed to learn in order to be effective as an entrepreneur down the road. And even joining NACO for me was largely driven by that because, the startup that I was working in failed. Even the incubator that I was working in, I saw a lot of interesting startups with interesting technology, but became pretty quickly apparent that there wasn't a lot of risk capital out there for especially clean tech companies at the time. Just a lot of bad experiences in kind of a generation prior with green tech had led to very few investors wanting to deploy capital into that. Also, clean tech falls into that category of hard tech, which is it's deep tech. Usually, it's involving hardware, which means that it takes a long time to fund it. It takes a long time to build it. It takes a long time to get to customers and revenue. And so as a result of that, investors just tend not to love investing in those kinds of businesses. And so it was a big part for me of wanting to solve for that problem, figure out like how I could make an impact on the capital availability problem, and make it a little bit easier for startups to be able to generate, support and kind of build and in building Canada. So that was a lot of my motivation for wanting to get into NACO when I was approached to do that. I was approached by some angel investors that had seen me and the way that I had been executing with the incubator, and asked me if there was something I could do to help them. So yeah, I think like it's largely driven by that desire to want to build a business, and kind of creating the conditions around me for being able to go out and do it, with try to minimize risk as much as possible along the way.
Yeah, I'm so glad that you talk about NACO because a lot of people only know you because of you were leading NACO. And yeah, I'm so happy that you talk about your mission back then. So I know that now you're in venture capital space. And what was it like about your transition through?
Mm.
Yeah.
Yeah, I mean, so NACO was a passion project. So that's the first thing. It's something that I did because I felt like it could have a big impact, like I said, in creating kind of the conditions for success for the market, for not just for me, but for other entrepreneurs as well. If we can get more angel investors, following good best practices, collaborating with each other, collaborating with VCs, collaborating with investors in the US, the goal was to bring access to capital in Canada and improve that, but also make sure that when investments were happening, that they were being done with best practices and that they didn't end up kind of messing up the companies, because that used to be a real thing. I mean, it still happens now, but it used to be a very frequent thing that you would see where people would take best practices from their experience in investment banking or M&A or their experiences in mining, and they would try to apply those to startups, and it just doesn't work. And so oftentimes, by mistake or not on purpose, but the investors would end up kind of killing the startups that they were trying to fund.
Mhm.
And it's kind of sometimes you see this where if you mess a company up too much, even if it has interesting technology, even if it has interesting founders and an interesting product, um, it's almost like dead men walking. It's like they don't know it yet, but nobody's going to touch them now. And because of that, they're not going to be able to raise money again and they're going to fail. And they just don't know it yet. And so, we were trying to solve for that problem. Now, I stayed there a lot longer than I intended to. I think when I first joined, I had committed to the board that I would stay for 2 years. And I ended up staying there for almost 8. So it was actually quite a lot. NACO being a nonprofit was a new experience for me too, because I'd never run a nonprofit before. I understood the concept, but it's obviously very different in a lot of ways than running a for-profit company. And so, as much as I enjoyed the work and I enjoyed the community building and kind of helping founders and kind of building these interesting relationships with these interesting people who take their own capital and risk it on early stage founders, The reality was that I knew that I wanted to go back to the business market. And initially, my thinking was that I would go either start a startup or join a startup, but do something where I get to build something because I love building stuff. Like I'm not, um, I often say I'm not a pontificator. I'm not the kind of person that likes to just critique and say, oh, you should do this or you should do that, and then good luck. I'm much more inclined to, yes, develop a strategy, but then actually take responsibility and accountability and execute it. And it's the execution phase that gets me going, gets me excited. It motivates me. And so for me, it was a bit tough. Trying to just watch these other founders and these other businesses execute and not be able to get involved and get my hands dirty, obviously because of my role at NACO. So I had really wanted to go back and do a startup or join a startup that I thought was exciting. And Yeah, I mean, at the end of the day, what ended up happening was that I was approached by Mike Skelski and Patrick Lohr, who had been trying to figure out their pivot from 500 Startups Canada into a new fund. And I was approached by them to consider joining Panache Ventures. And so I think that had any other fund approached me, it would have been a very easy no for me. The reason why I said yes to Panache was because Mike Sigelski was somebody that I had gotten to know over the years on the NACO board and had a ton of respect for. Somebody who is just a genuinely good person, but that also knows a lot and has had so much success in the startup ecosystem. And somebody I thought I could learn from. And then Patrick Lohr was, a friend who I knew had been wanting to develop his own fund and build out his own fund for a long time. I was actually partly responsible for connecting Mike and Pat together and connecting them to the 500 folks in getting 500 Startups Canada off the ground. And when that imploded for reasons that I'm not going to go into here, but I think anybody who wants to, you can look up online what happened to 500 startups, and you'll see. But when that happened, they decided to pivot into a new fund, and it was really the opportunity to work with them that lured me in, and so I decided to make that my thing. So I started working on that. Even as I was transitioning out, it took almost a year for me to transition out of NACO. But in that time, I started kind of reducing my time at NACO, and I started spending more and more time on Panache and getting to work on the team there, in really setting the foundations and building a fund from the ground up.
Yeah. So with that contact established, could you please introduce us what is Kanata Venture? What are you guys trying to achieve?
Yeah. Yeah. So Kanata Ventures is a fund that is focused on B2B companies, enterprise facing companies that are trying to expand into North America. So we call them new to Canada companies. What that typically means is that either the company itself is coming from another country where they've managed to, show a certain amount of traction, success, and are now ready to take on the challenge of expanding into North America. Or sometimes it means founders that have already landed in Canada and have a company, whether they started it here or started abroad. But again, have figured out, something like they have a product, they have customers, they have some revenue, and are trying to really execute, the process of building out something that could be global in scale and nature, but leveraging the benefits of being in a place like Canada, with all the benefits and kind of resources and opportunities that really the advantages that Canada has to offer. So I'm a big believer in Canada, obviously, as you can tell. I think it's a great place to launch a business into North America. And so we're just trying to help founders to do that. This actually, for me at least, started as a project when I was at Canada that I started looking into in terms of like how to, when I was at Panache, trying to look into how do we, allow structurally Panache to be able to take risk by investing in companies in these emerging markets. I was a big believer in the idea that, talent and ideas are global. That you can build interesting companies globally, but that the market is local and concentrated mostly in North America, especially for enterprise B2B on the customer side, and of course on the venture capital side. 50% of all dollars goes to companies based in North America, and so what we wanted to do was really kind of open up that market to foreign founders that are trying to execute into North America and allow them to access it because it's not easy. I think like starting a startup anywhere is hard, but as a foreign founder in North America, you have that extra bar that nobody knows you, nobody trusts you, and so like, how do you get to the point where people will take a chance on you? And like, there's a pathway for sure, but it's a little bit harder. You have to focus obviously more on revenue and showing that you can execute in North America. And so by working with us, they're able to just shorten that timeline and de-risk the process.
Yeah, I suppose it could be really different of operating a local fund that focuses on local companies rather than a global company. So is there any challenges that you like to share with us that you faced in?
Um, yeah, I mean, like, this is the one thing I'll say, and I should mention that like this is obviously not part of Panache Ventures, so Kanata Ventures. I started working on the idea when I was in Panache, but I left, and we decided not to proceed with doing this inside of Panache, and I left to go pursue it because I was really passionate about it. And I think like as we've been building this fund, we've been really getting to see in execution both the good and the bad of what we're trying to do, which there's an opportunity definitely to work with really interesting companies that have sometimes stronger fundamentals than their comparable counterpart in North America in terms of traction and revenue and those kinds of things. Because oftentimes they're bootstrapped, they have to do that. They have to have more stable revenues. But the fact that as a foreign company coming into North America, you're going to get discounted. You're going to kind of get ignored. It's a real thing. And so even with the connections and the network that we have, myself and my partner at Canada, it's still a challenge to kind of get investors comfortable with taking a risk on a foreign company, and or a company that they see as foreign, regardless of whether they've already kind of established themselves as North American. And just to be clear, all of our companies need to reestablish as North American parent company in order to really be able to execute on this market. That's part of our thesis. But I think most investors still see you as a foreign company or a foreign founder until you really dig your roots into the North American market. And so overcoming those challenges, I think, can't be understated. Oftentimes you find founders that are coming into North America thinking, hey, I'm gonna, I have this great company. I'm gonna go to North America. I'm just gonna like show up and I'm gonna like send my deck around and I'm gonna get some money and it'll be great and I'll go back home. Doesn't work that way, right? Most funds in Canada, especially, but even in the US, most funds do not invest outside of North America. So, right off the bat, trying to get money from North American investors, and then, continue working out of an emerging market country, oftentimes won't work for the investors. And even if you establish a Delaware corp or a parent company in Canada, and then but you're functionally still really working on emerging markets, or you're still really working on keeping your company operationally in another emerging market. I find that it is also quite a challenge. It's not enough just to have a shell company entity. You have to actually show that you're committed to the market, because oftentimes investors want to know how they can help. And if they have no ability to help you because you're in this foreign market where they don't understand anything, then really they just won't engage. So these are I think some of the challenges that we see with some of our companies. For sure, like there are other challenges, like the macroeconomic market is not great for everybody. For funds, for companies, does matter. Everybody's having a tough time. But yeah, there's a lot of challenges. I think like building a VC is a lot like building a startup,
Yeah.
except that you're not selling the investor a product that you have. or you're not selling them, your existing customer traction or your historical data. Everything when you're setting up a VC is future looking. It's, I have this plan and I expect to execute it in this way. So in that sense, it's a lot more like trying to raise a round for your company on a pitch deck, but which is, quite difficult depending on who you are. But then on top of that, you're not even selling them on a pitch deck of a company. You're selling them on a pitch deck of, I plan to invest in these kinds of companies that maybe exist, maybe they don't exist right now. And so, I think that in some ways, building a fund can be even harder than building a company, although both are quite difficult and should not be underestimated.
Yeah, I feel like VC are also selling for their ability of doing deal sourcing and deal screening. That's one of the major things. So,
Yeah.
is there any excitements and progress that you like to share with us? That
Yeah, I mean, I'll say this, like, we have some fantastic companies that we've already backed. Founders coming from, Latin America, Europe, Southeast Asia. Those are markets where we tend to focus. We typically try to find markets where we're about 5 to 10 years behind the curve, in terms of where Canada is today. If you look at access to the market, if you look at access to capital, access to talent, we're looking at companies that are in countries that are or coming from countries that are about 5 to 10 years behind where we are today. Part of that is just trying to understand that the companies are at least in an ecosystem that can support them to a certain extent. So there's not, it's not so far behind or so far underdeveloped that executing on actually building the company is going to be difficult. But we're looking for companies that are have an understanding of how to do this, and what they need to understand is how to do it in North America. And so, in terms of opportunities, yeah, we look at a ton of companies. We have a number of, like, over 100 referral partners that send us deals, usually VCs and accelerators that will send us deals to consider. Obviously, we don't invest in all of them, but we try to help the companies as much as possible. If they're going through that process, we try to help guide them and make the right decisions at a minimum. And then if we think there's a good investment opportunity, we'll participate. And so, yeah, I mean, I think, the main thing I'll say there is just that, the model and the thesis is proving out. With the economic times being so turbulent, we're actually seeing an increase in the number of companies applying to us. But the challenge remains. These companies ultimately have to execute, so we have to be very selective. And yeah, I mean, I think I think that the challenging economic times, as much as maybe they're more challenging in some of these emerging markets, there's still challenges here. And so, it's just kind of, I often say you don't live in a vacuum, or you don't live in isolation. You live within the context that you have. And so we have to just keep that in mind when working with companies and managing expectations with them, that, this isn't kind of like a turnkey thing where you just land here and people are throwing money at you. Like, you have to actually execute. You have to actually, give confidence and take your time to develop yourself, and kind of get to the point where people trust you and you're an own entity.
Yeah, you were talking about environment. So, do you have any thoughts that you like to share with us about the Canadian venture capital system here? And challenges, any pitfalls that are easily.
Yeah, I mean, I did a lot of speaking this week at different conferences, and one of the things that you often hear about, like, founders will come up to you and they'll say, "Oh, I heard that the Canadian ecosystem is not that good, or that because the U.S. ecosystem is just so much better." Like, you often hear about companies that are trying to raise capital in Canada and have a tough time doing that, and so they go to the U.S. to raise capital, and maybe they do it successfully, maybe they don't. But, like, it's an often thing that you hear, especially at the early stages, where the company will just say, "Screw this, I'm going to go to the U.S. and raise capital there." The reality is that, like, it's all about context, I find. So, I mean, I've traveled the world enough, and I've seen emerging market ecosystems, and I know what that's like. I can say without a doubt that Canada is one of the not only largest but more well-established, more developed venture ecosystems out there in the world. It's a great place to build a company. Yes, for sure. When you're comparing it to Silicon Valley, which is literally, the epicenter of entrepreneurship, tech entrepreneurship, venture capital, we are not at the same level as Silicon Valley. They have an exponential amount more capital than we do, more funds than we do, more angel investors than we do, more talent than we do. They've been doing this, for 50 years, and have had a solid head start on us for quite some time. Canada has caught up and been able to kind of bridge that gap a bit. One of the really interesting things that we've seen happen is that Canadian companies now are able to access U.S. investors without having to move to the U.S. It used to be, that if you wanted to get U.S. investment, you had to move to the U.S. It wasn't just like an option or a choice where, maybe it's easier in the U.S. and so you're going to go to the U.S. to raise money. It used to be that they would demand it. I find that with the relationships that have been developing between both angels and VCs and other investors in the US. Here, you're seeing a lot more comfort from the US investors being willing to invest and then, kind of trust the Canadian investor to help support the company and help communicate when there are any issues and that kind of thing. And so you're starting to see a lot more cross-border investments. I think in 2021, I would say the vast majority of the deals had some U.S. investors involved on the cap table. You were seeing regularly deals being done by the big funds like Andreessen, Bessemer, et cetera, Sequoia. You would see all of these funds participating in those rounds. And that was really encouraging. I think that what it means is that, kind of as far as investment goes, Canada has really become almost like the 51st state, where there really aren't huge barriers. There's enough of an understanding of like corporate, legal, and tax implications across the border to be able to get these deals done without creating major problems, which used to be one of the hurdles. There's trust and understanding between the investors across the border. So that's very helpful to be able to facilitate syndication and co-investment on deals. And I think that those things, are just kind of combining to make this an even better ecosystem than it used to be. And I think that like that has had positive and negative impacts. We've seen the valuations on deals go up. We've seen deal terms get better for founders, and I'd say valuations. I point that out because valuations are really a double-edged sword. Yes, you can get a bigger valuation in the US, but founders sometimes forget that if you're getting a bigger valuation, it means that now the bar has been set higher for the next round. And you have to execute and be able to generate the kind of performance that your investors expect by the next round. And if not, you could find yourself in a down round or some other similarly bad situation. And so, there are some trade-offs for sure of having all this foreign investment interest in North America. But generally speaking, it's very positive. And generally speaking, we've been able to keep, costs, especially labor costs, relatively low, which is one of the advantages that Canada has. On top of the grants and the access to R&D credits and that kind of stuff, which exists, I think, in Europe, but less so in the US. And so, these are some of the advantages that I think founders really, would do themselves a favor to explore more.
Yeah, totally. I think we don't lack of great founders. There are many great founders within Canada. If you look at YC, graduated founders, there are many founders that are from Toronto, from Waterloo, University of Waterloo. So I don't think we lack of great founders, but we just need the capital to take a look at those founders within Canada, just to make this environment more diverse with investor from different countries, from the US, from the Canada. So I think that's how I would want to solve the problem. Yeah, it's also
for sure.
Yeah, so given that status, so what do you think is a key ingredients that Canadian innovation system is lacking? So that if you have this, it's ideal.
Yeah, I mean, I think, we have the capital, we have the talent in certain areas now. So we've been pretty good at building, I would say, medium scale B2B companies. So there's a lot of people that understand how to sell to like, B2B, like B2B enterprise, B2B SMB, and that's fantastic. Used to be that we didn't have talent for that, and now after enough cycles of companies kind of being built, being successful and then being sold. We've seen now some of that talent coming back. We've also seen that from some of the people that did leave, where they went down to the U.S. and learned a ton, and then came back and invested that into the Canadian ecosystem. So there's some really positive factors out there. I think where we lack still is maybe some of the more senior level expertise and experience. We don't have that many people in Canada yet that have been able to grow a company from scratch to, even 100 million in revenue. But like if you go put the bar higher, like $1 billion in revenue, or 10 billion plus valuation, like we just don't have that many founders that have done that in Canada. So we need to, yes, where we do have Canadians, whether they live abroad or in Canada, that have that experience, we need to make it appealing for them to want to be here and build from here. And we need to do things to kind of lure the talent from other markets that we don't have. So part of that is just having enough critical mass in the ecosystem to lure them, because if it means uprooting their family, if it means making a move from like the US, for example, to Canada, there has to be enough of it, not only an incentive around the opportunity that they're specifically coming for, but the opportunity within the ecosystem as well. In case things don't go as planned and they have to start looking for the next opportunity, if they'd want to know that there are enough opportunities in North America and in Canada specifically that they can approach. So there's a little bit of a chicken and the egg there on the talent side, but I think that is one of the areas where we can still grow. And then when it comes to capital, I would say early stage. Late stage I find is quite well capitalized in Canada right now.
Yes.
Of course, you could always use more money, but the pre-seed, especially, like we talk about, there's some seed funds in Canada. Oftentimes the seed funds in Canada are doing kind of late seed deals. We don't have enough funds doing early seed or pre-seed deals. And like we have very few that actually do pre-seed deals. And then the angels, especially because of the economic climate, the angels have really taken a step back, and you're seeing much less activity on the angel front in terms of doing like early stage pre-seed deals, and that combination is really having an impact on founders that are trying to raise capital. And then most specifically, I think when you're looking at certain sectors, things like deep tech and hardware, just really hard for investors to do. Most of the funds are built with the plan of going after SaaS companies or that kind of thing. Where it's much easier pathway to get to revenue, to be able to track customer traction and metrics. Hardware companies in general and deep tech as well, they tend to require a lot more time and energy and investment of dollars to get to that real customer validation proof point. And so we need to be doing more to support those kinds of companies at the early stages if we want to have those companies build and grow in Canada, and we want to be able to benefit from the IP kind of windfalls that are coming from those companies. So those would be the areas that I would point out as needing help.
Yeah, absolutely. Because I feel like hardware and deep tech, they have more risk in the operation side, so that investors are tend to not face those difficulties, but just go to more of more easily operated company like SaaS companies. And that's definitely one of the major reason here. Because in deep tech company, you're facing both technology risk and commercializing risk. So I would say that's one of the major reasons why. But sometimes it's only the deep tech parts are doing the most innovation things that are changing people's life. So I personally agree with that too. So do you have any advice? Last question. Do you have any advice on the early stage founders?
Yeah, I mean, I think so. I think like one of the problems for early stage founders is that in the last decade, um, a lot of the message that they got was, move fast and break things, grow at all costs, don't worry about the details, move fast and break things. I think that that's still valuable, but to an extent, what we saw as a result of the collapse of kind of the global markets and the economy and the collapse of many VC portfolios out there like SoftBank and Tiger Global, who are having some real challenges themselves with the high valuations and dollars that they invested into companies early on. What we're seeing is that the model of capital as a moat. If you have access to dollars, you can outcompete all your competitors, and if you can grow quickly enough, then you'll figure out profitability in the future. I think that is more or less, I think we can say now that that is a failed thesis, and just did not pan out the way that people expected. And the best examples of those are like Uber and WeWork, which have really struggled to turn a profit. I think that right now, if you're a founder and you're trying to entice investors to come and back you, or even if you're just trying to build a business, regardless of whether you're trying to get venture capital investment, what you really need to be focusing on is, a solid product where you have an advantage, and where you can quickly get to revenue. Revenue is the new metric, more so than growth, even like growth is still important, but revenue is important. Pathway to profitability is important. People are asking those questions now that they didn't used to ask before. And so I think you do yourself a disservice if you take the approach of just wanting to build something really quickly, just grow vanity metrics, top line revenue, and hope that investors keep backing you. You're essentially putting yourself in the hands of another person to determine your fate. So if you're really trying to build a business, make sure that you understand where the money's coming from. Try to create a situation where you have as much control as possible over that. And if you can show investors that you've landed on an interesting opportunity that is unique, that you're uniquely positioned to execute on, and that generates revenue, can be or is profitable, and is growing fast, you're going to get investors. Like that's the reality. People will want to give you money if you can hit those kinds of metrics. But trying to just sell people on vaporware or in an idea, a vision, that's gotten a lot harder.
Yeah, totally. I always tell my founders, like especially early stage ones, I said, don't just rely on raising, like try to do it first. Use the data, use the revenues to prove that this will be working, not just like begging for investors to invest in your ideas. They're investing in your actions and executions. So yeah.
Yeah,
Yeah, thank you,
exactly.
Yuri, for doing this. I'm done with my questions. It was awesome. Yeah.
Okay. Yeah, no, happy to be part of it.